Hello and welcome to Pro Trader Strategies Market Commentary for Monday, October the 14th. My name is Eric Wilkinson, and yes, you may recognize me as the Wolfman from mainstream media. What I'm here to do is talk about the markets, teach you guys some option strategies, and more importantly, show you how to implement those option strategies to increase your probabilities of success. Anyway, without past performance, future performance is not indicative of future results, all right? Something like that. Past performance is not indicative of future performance. How's that? All right. Anyway, it is Columbus Day, so bank holiday here in the United States. Treasuries are closed. Usually on a bank holiday, we will see lighter than normal volume, and we are already starting to see that really across the board so far. Across the pond, though, we did get industrial production. That came in at 0.4%, expected to be 0.3%, so slightly better than expected there. It's not a headline number really or a major market mover, but it is something we need to really keep an eye on with the way that European economic data has been coming out so far. And that's about it for the data there. Now let's talk about the overall markets. We've got crude oil coming off by about $1.30. It's not really showing up at the pump, but we are seeing crude oil come off here in the United States. We've talked about this. It's going to kind of hover in between $55 a barrel and $50 a barrel. That's kind of where the supply and the demand are meeting right now. With the economic picture, there's going to be a lack of demand across the pond. Here in the United States, it's a bit tepid, and we should see it kind of trick sideways here as we are currently seeing. And then we go over to gold futures. It's starting to make a little bit of a move up as speculation in and around QE. We talked about that Friday. They're doing some non-QE. They're not calling it QE, but it is really quantitative easing in a sense there. And the October meeting is looking like they are going to do a rate cut. We're still trying to discern whether or not it's going to be a 25 basis point cut or a 50 basis point cut, which should drive gold a little bit higher. Now, bonds, we've seen a big sell-off the last few days. We saw at least over 1.5 points each day. So big sell-off, came right back down to the Fibonacci 160 line. That's going to be a psychological level as well. We're off of that now, and I think that we're going to see bonds start to move a little bit higher as we start seeing some of this quantitative easing and the probabilities of a Fed cut being a little bit more solid. Then we've got the VIX coming off because equities just pretty much sideways on the day. Not a whole lot of volume. Like I said, we should see really light volumes today, and equities moving higher will always take the volatility out of the markets. We saw the Dow Jones up about 30 points, and we've got NASDAQ up 7 points, pretty close to unchanged, but again, not a major market mover today. It's really quiet. You can see down here on the volumes that it is pretty light for a Monday. And again here, as you can see, almost one of the lowest volume days that we've seen so far this year, with it being a bank holiday. A lot of people kind of talking about the equities. You know, October is usually a pretty bad month for equities, and we also have earnings coming out. So earnings are really going to be the driving factor in these equities going forward, and we're starting to ramp that up this week with the bank stocks coming out tomorrow morning. For the most part, we've got a lot of bank stocks. We've got Citi, JPM, who else? Goldman Sachs, and then also we'll have Johnson & Johnson. So I don't know if I'm going to be playing these bank stocks right off the bat. Johnson & Johnson is something I'm definitely going to be looking at. We got E-mini S&Ps unchanged on the day, and you can see here pretty quiet. Overnight inventory did get a little bit short, flushed those guys out coming into the day session. So it's pretty balanced across the board right now. I don't expect to see a major move on either direction unless maybe China comes out and starts spouting something off, but they're probably going to be doing damage control today with SoftBank talking about WeWork and writing down some of that asset. So that's the major talk out of China, and I don't think that we're going to see anything big coming out of there today. But like I said, probably looking to play something like Johnson & Johnson today. I think I'm going to be throwing in a strangle around this strategy, maybe something in a Goldman Sachs or one of the banks. But at this point, I'm looking to maybe hold off on those. I don't think the bank stocks are going to do that great, and we could see a bit of a sell-off in those types of stocks right now. I do think a lot of people have been looking to refinance. That being said, those people will probably hold off to the end of the month here to see how rates shake out and determine whether or not they're going to do their refinancing or not. All right, so other than that, Johnson & Johnson probably going to be looking at a strangle. The bank stocks, I'm a little bit iffy on right now. They're the first ones to come out with the earnings, so we'll have to, that'll be a game time decision on that. And usually I put in those earnings trades late in the day after about 1 hour, let's call it, to the close. So 3 o'clock Eastern is usually where I start to look to put those on, and I'll probably do that today as well. That's about it. It's going to be a quick one today because there's not a whole lot to talk about with the light volume and economic data day. So that's about it, other than if you can't take that, take it easy.